Welcome to the Capital Spreads Weekly Update. Today is Wednesday, the 25th of January 2012. And looking at the last week of January, and it looks like the equity markets seem to have held up quite well for the whole of January. Now, I believe this has largely been off the back of quite good corporate earnings out of the US, which on the whole have been better than expected or very stable. The most recent has been Apple, which had its best earnings quarter in its corporate history. We also had the likes of Microsoft announce very stable earnings, and that has given quite a lot of optimism and momentum to the US economy. In contrast, the European zone continues to struggle and lag behind. Greece, for example, continues to have problems restructuring its debt. There's rumours that quite a few European banks continue to hold on quite toxic debt and will possibly be looking at further downgrades going forward. So the theme that seems to be emerging at the moment is a US economy that seems to have turned a corner, while you have a European economy that continues to stall and stutter. Combine that with the fact that the overall volatility in the market seems to have actually died down a bit, so it makes it a lot more difficult to actually be trading in and out as we were during most of 2011. The VIX, for example, which is a measure of US equity volatility, is down to about 19.5, which is the lowest it's been since about July 2011. Under current circumstances, what it really means is that in order to get in and out of position becomes a lot more difficult because the volatility and the range of the markets really isn't there. Looking at the economy closer to home, the UK had a contraction in its GDP, which was announced earlier today. Last night we also had Mervyn King, the Governor of the Bank of England, talk about possible further quantitative easing. Now what that would really mean is that if that was to go through, you could possibly see your holidays being a lot more expensive for the coming year or so. So looking at the FTSE as it currently stands, it's trading around 57.10, it's down about 40 points in the day. The FTSE has continued grinding high over the last month or so. Largely I believe it's being driven by a better US corporate sector, as I mentioned earlier. So you're looking at resistance around 57.80 in the FTSE. If it manages to break through that, you're looking at resistance around 6,000, and that is certainly being a short-term target. On the downside, if it stalls from here, you're looking at support possibly around 56.30 and then down to about the pivotal 5500 level. The FTSE continues to be very much in a sideways range at the moment if you look at the longer term picture. So if anything, you might possibly be wanting to be playing the extremities at the moment with quite tight stops. Gold too continues to remain quite topical for reasons related to Iran as well as other political news at the moment. Now gold seems to have developed a bit of an uptrend since the beginning of this year. It's trading around 1655 at the moment, hitting a high of about 1685 very recently. It seems to be very much following a trend in what the US dollar is doing at the moment. So as the dollar's weakening, for example, you're seeing a strengthening in gold and vice versa. Now that would certainly be a factor to keep in mind if you're going to play gold as a strategy going forward, although the long-term trend will certainly be upwards. Oil too continues to remain very topical for reasons related to Iran. The most recent news being obviously that the EU is expecting to have a EU-wide embargo in place within about 6 weeks. Given all the negative and pessimistic news that we're having out of Iran and the oil sector in whole, oil seems to be holding up quite well at the moment. It seems to be ranging between about 116 and 106. It's currently trading around 109.30 or so. If anything, you'd possibly want to be playing the extremities again on this, but bear in mind it's one of those products that the slightest piece of news can certainly move the markets around very, very quickly. In terms of the theme week going forward, we have a number of figures over the next week or so that could certainly influence and shape the direction of the market. We have, for example, US home sales and US initial jobless claims out tomorrow. Now, jobless claims was watched quite closely last week because it came in much better than expected, and people will be watching that for the very same reason this week. We also have US GDP out on Friday, and we also have the Davos meeting in Switzerland, which is the World Economic Forum, happening as we currently speak. There could be further rhetoric out of European politicians regarding what they will do regarding the Eurozone out of Davos. Against all this, we continue to have the uncertainty and the negotiating that seems to be going on in the background with Greece and its government in terms of how it would like to restructure its debts. At the moment, Greece continues to remain in a deadlock, but any news out of there could certainly move the markets around very quickly. In terms of client activity, many of our clients have shorted the indices markets we've had at the moment, believing that the rallies that we've had in the index markets recently have been overdone, considering all the negative news that we have been having overall. So they are, for example, short the FTSE, the Dow, the DAX and the S&P. They continue to hold long positions in both gold and silver, and that position just never seems to change. and most recently they've started to go short both a euro dollar as well as euro Swiss. In terms of the theme of the week, I would say there's two emerging themes to possibly keep an eye on. The first would be the continuing divergence between the US economy and the Eurozone economy for factors that I've mentioned before. Now combine that with the fact that the volatility in the market seems to gradually actually be dying, so it makes trading that a lot more difficult. It looks like the markets at the moment will be very much driven by both political news as well as some corporate earnings. That's it for now. As usual, if you have any feedback, it's media@capitalspreads.com.